Good morning. It's a great pleasure to be here, and I'm very honored to start the discussions, the thinking of today. And when I was trying to find the way here, I had a feeling that Cleantech is at a similar stage as I was when I was on the way here. I walked around, my shoes looked like I was in the mountains, and Cleantech is probably at a similar stage, because if you talk today about Cleantech and you want to raise a fund, investors, the institutional investors, they are not very interested in. And I would say from a perception perspective, Cleantech is in a crisis. We see that one fact is that it's in a general, very difficult environment. It's very difficult to get funding. Most Cleantech funds have real and serious problems to get to raise their next fund. The earlier stage a fund is, the more problems such a fund has, and there are certain reasons for that. But also it's a perception issue, and I think we have, as Cleantech investors, to a certain extent, to redefine Cleantech, to redefine what we are doing, and also to start actively communicating that, because I'm persuaded that that Cleantech will have its best time in the future. Like Obama said, you know, the US will have its best time in the future. I'm sure, I don't know whether it will be for the US, I can talk and assess that, but I'm sure for Cleantech we will see that. But we have to think about the learnings of the last 20 years, and this is the length I have been now in this industry. Not always as a VC investor, but first when we set up and built SAM Sustainable Asset Management, so more on the listed side, and we have to rethink what does that mean for our investment strategies and how shall we approach it. Just one word on the background. Zouk, we are doing late stage investments. We provide growth capital in addition to infrastructure investments, and so I hope that we will see many companies, early stage companies, startups, once they are successful, that we can then invest in them. And that is also the reason why I'm so keen to support this initiative and Ecosummit or summits. So we are doing growth, equity and infrastructure, and the definition of Cleantech, but I would like to focus on that a bit later. I think this is a very important slide. Over the last 20 years, we have seen several boom and bust cycles in Cleantech. It started in '95. I was those days, we set up SAM Sustainable Asset Management, and the first big success that we found as an investment was Ballard Power, a fuel cell company based in Canada. They were listed. In a few years, they multiplied their share value by 5 times, and it was a huge boom. Everybody thought that in a few years' time, and by now, the cars would all be driven by fuel cells, driven by Ballard Power, Ballard Inside, and so on. That was the concept, but unfortunately, reality was not able to meet expectations, and we had, in that sense, from my perspective, what I was experiencing, the first real boom and bust cycles, that was fuel cells. It continued early the 2000s when in SAM, our private equity team invested in several wave turbine engines. There was market studies out, wave turbines, this will be the future of power generation. They did 3 or 4 investments in the space. I think today they haven't exited one of them, and I think only one is still alive. So another boom and bust cycle. The same true for agri-fuels, bioethanol or ethanol or biodiesel. I wouldn't even call it bio, so I call it here agri. Huge difference between bio and agro. And And again, huge expectations, but another bust cycle. And in PV, solar, we are experiencing the same. And I think it's very important that we take the lessons learned from these developments, so that we can focus on the next area of cleantech, and that we as cleantech investors do it also probably and hopefully in a bit smarter way. First of all, and Jan also mentioned it, in most of these technologies we have, as we see it here, they're all very close to industrial engineering, mechanical engineering, long technology development cycles, long cycles to develop a new technology, a wind turbine, a fuel cell, or a photovoltaic cell, huge investments, and also very long sales cycles. So long development cycles, these technologies are mainly hardware-driven, industrial-driven, are very CapEx intensive, and just Soltecture company, a thin film company, CIGS technology, probably 150 million euro were invested in a company, and they had then a production capacity of around 35 megawatt per year, which is, that shows on one side over more than 10 years, 150 million in investments, and for 35 megawatts of production capacity. That shows the challenges and we are facing in several other industries several challenges. Dependency on regulatory framework. Feed-in tariff. The objective was to bring new industries to scale, the wind industry, photovoltaic industry. As an instrument, it was very, very successful, because it was able to create economies of scale from a macroeconomic perspective. The dynamics then shifted. The Chinese started to support it. That was industrial policy. And the Chinese then decided to invest over the last 3 years more than $60 billion in the PV industry. You know, this is an incredible number. With that, we could have saved probably most countries in Europe on the Euro crisis. So just in the PV industry, and whereas the feed-in tariff system was very successful, but as soon as such an instrument is successful enough, every regulator for macroeconomic reasons will take back the carrot. And this is something we have to take in mind. We are very dependent, these industries, and as an investor, we are often very dependent on regulatory frameworks. If it's a carrot that is provided via feed-in tariff, active cash systems, they have to, we have always to be aware that the politicians, governments will take it back. And otherwise, you know, it's very difficult at the moment to find regulatory schemes that stay stable, that remain the same for a period of 10 years. When we have long development cycles of new technologies and the regulatory frameworks changes every year, every second year, it's very difficult to develop a new technology over a 10-year framework. And so these timelines quite often don't fit. The other thing is dependence on strong gatekeepers. You know, when we talk about smart grid systems, you can't only do it in whatever cooperation with utilities. They are strong gatekeepers. Or if we talk about electric mobility, in a certain way, the car OEMs, they are strong gatekeepers, and we see that in many, many industries. So this is another challenge for many startups to manage the strong gatekeepers. And I mentioned already, Another issue is the industrial policy. Cleantech has become part of industrial policy, and at the end, China is working differently than the Western world, which is much more based on market policies and free markets, and that has also very strong impacts on the development of technologies. But on the other side, we see transformational shifts in the energy industry especially. We see decoupling of energy and economic growth. Just as an example, last year GDP growth in Germany was 3%, but energy demand contracted by 1%. And so our industries are much less energy intensive than 20 years ago, and that will continue. Why is that happening? Because the resource efficiency, new technologies are available. We see that also in the area of digitalization and networks of energy markets. As Jan also mentioned, a huge trend there, very interesting trend. Also to mention just one number, whereas 3 years ago in end of 2009, 1% of all internet traffic was created by mobile applications. Today it's close to 15%. So we see we can access knowledge, we can manage things. Everything is connected, and that will have a huge impact on how energy will be used and consumed in the future. We see a strong fall in renewable energy generation costs. And due to that, the production of wind power, sun power is at zero marginal cost. The impact on that is that the wholesale prices on power is currently hitting a 5-year low. Peak power prices are strongly down, baseload power prices are down, and everyone is just talking about high energy prices. They are high because we have to change the grid systems, but on the other side, on a wholesale level, cost came down, and it will continue because 70% of all the power capacity that was built in Europe last year was renewable energy power. And we will see a continuing trend here that will create several challenges, but with new technologies, we are also able to manage a lot of these challenges. Shifts towards decentralized energy generation. 10 years ago in Germany, power was generated by 150 centralized power stations. In the meantime, with the many decentralized power systems, mainly on PV, we have 1.5 million decentralized power stations. That's changing the grid, of course, will create a lot of investments in grids, but that is, at the same time, it creates also a huge opportunity. And the interesting thing is that most of the renewable energy power generation plants that were built in Germany in the last years are owned by private investors, by privates, and only 4 gigawatt is owned by utilities because they missed the train, and their portfolio now is very different. And this is not so much a case, it does not impact Europe short term that strongly, but especially in the US, we will see a huge scale up of shale gas. It will have an impact on Europe because the world around Europe will all focus on cheap gas. The gas price in the US is almost 1/3 of the gas price in Europe, and that will have a huge impact also on Cleantech going forward. So, Cleantech 2.0. First of all, as I already mentioned, Cleantech is going digital. We see more intelligent and flexible grids. The challenge is, of course, and I discussed it just with Tom Schulz before, how can it be implemented? What is required that it's implemented? We depend there on regulation, and we depend to a certain extent on the gatekeepers. Connected machines and buildings and homes shift from industrial to digital heavy energy users, whereas in Germany the biggest energy user is Wacker Chemie with 1% of all energy consumption. In the US, the biggest energy users are the data centers, Google and others. But what we see there is they are able to cut costs and increase energy efficiency dramatically. A new Intel data center consumes 95 saves 95% of the energy compared to 5 years. We see there huge savings and due to new technologies and availabilities. And the other thing is sensors, large data sets, analytics. Due to the interconnectivity of everything, we will see that happening in all other industries, across industries, transportation, agriculture, and in water management and so on. So Cleantech now becomes really a big ubiquitous. So it will affect us in all aspects of our life, and will enter into that. So we will see it in all operations, in industrial processes. We see it in logistical processes. We see it in sustainable agriculture, where with new sensors, data networks, data analytics, and material handlings, we see opportunities to improve the efficiency and productivity of agricultural processes. We see emerging new business models. This is something we like. We will see more and more often service components linked to new technologies. And by the way, this is something we like because we know that the Chinese cannot compete that fast with a new service, because this is something that links a company to the client. We will have collaborative consumption, upcycling, and value in waste streams. So from an investor's perspective, what are important considerations going forward? The other thing were more new focus areas. So as an investor, and I would also suggest when you, as a startup, think about how dependent are you on regulatory framework and in the industrial framework. We as an investor, for the last 20 years, I have to say, it's very difficult to trust politicians, it's very difficult to trust governments, and if we cannot find a company where we can, which can be grown, or its business can be grown very, very fast, and we are dependent on the regulatory framework for 5 years or 10 years, it's almost a no-go in the meantime. We would like to see proven cash-generative business models. I can just urge every startup, try to build a business model, to prove a business model, and to make it as cash-generative as early as possible. This is a very important aspect, and so the business model validation on basic terms, we need to focus on that in order to be able to invest. Capital efficient growth opportunities, so low capex and capital light solutions, not only for the investor but also for the clients, because the clients, we are facing a debt crisis. Many companies, also if they generate 50 million euro in revenues, 5 million EBITDA, they have problems to get debt in Germany. But that also means if you sell a product to someone and to a client, they have problems to finance it. We are still going through a huge financial crisis. So investments and new technologies, and the digital economy allows it, should be capital efficient. From an investor's perspective, when we invest, we already talk about the exit opportunities. So exit needs to come. The exit perspective is very important, and we would like to have it as concrete as possible already at an early stage. And as an investor, also the investment horizon, our investment horizon, is shortening, because we have to, in order to be able to raise our next fund, we have to prove our investors that we are also able to pay back the last fund, and only then we can raise our next fund. And this is, from a venture capital perspective, something we have to take into mind when we invest. And as last but not least, from our perspective, we have to go for diversification. So that was in a nutshell how I see the development of Cleantech. Overall, it will affect all aspects of life, and I see it very similar. When we developed the Dow Jones Sustainability Index in '98 and persuaded Dow Jones to launch it with us, I was in New York sitting in their office and they were telling me we expected something different. They expected an index concept which would exclude 50 industries and just focus on a very few ones. I told them sustainable development will affect all aspects of life, and that was the reason why we were able to, in '98, to persuade Dow Jones. And I see a very similar development now happening in Cleantech. It will affect all aspects of life, and for that reason, the best time Cleantech will face in the future. Thank you very much.
Warte, noch Q&A noch.
Sorry.
We have always time for 1 or 2 questions. The idea is that you raise your hand and you wait until you get the microphone from the microphone runner, and then you will be nicely featured on Ecosummit TV too, at least audio. Who has a question for Alois? Rolf.
Good morning, Rolf Adam, Cisco. Alois, how do you deal with the snowball effect in the utility space? With utilities wanting to do pilot after pilot after pilot, it may take 3, 4, 5 years until the startup has convinced a utility that the product is suitable for the market. And then you have initially no revenue, and then you have after 5, 6 years massive revenues because utilities typically buy at scale. At that time, with a shortening investment cycle, you will already have exited the startup and probably will be foregoing massive revenue creation potential. How do you deal with that effect?
This is just one of these examples, which I mentioned also. It's so difficult for an investor to invest in such a company if this marketing cycle, I will call it marketing cycle, takes that long. And in the current environment, in order to get money for fundraising, we have to get to a shorter exit cycle. The answer is I don't have a clear answer on that. I think the answer must be that the companies, and we all have to work stronger on the regulatory framework, because to kick the utilities, or if the regulatory framework is changing, then the utilities are also changing. And the other thing is, in general, utilities are facing a lot of trouble. Their portfolios are, in their portfolios they have old assets that are not generating returns they used to generate. Nuclear power, centralized power stations. They focus now again, they missed first the train of renewables, and now they start to focus on on centralized power stations again by doing offshore. My personal view, offshore is high risk, wind offshore. And that means they will need an even stronger balance sheet going forward because of the risk-return profile there. And that will bring them into even more problems in my personal perspective. And that will, in total, even generate more problems to sell to utilities. And my only answer is, for the moment, try to avoid to sell to utilities. Because they are facing a lot of troubles, and to do business with someone who is facing a lot of troubles is never easy. So for that reason, I can't give you another very clear, good answer for that. Of course, after a certain time, probably 10 years, that will change or might change again.
Okay, all right, final round of applause for Alois.
Thank you.
Thank you very much.